And we are live. This is Travis from Carter Cow Capital. Uh, sorry, Carter Cow Capital, Trade with Travis, and Expert Advisor Reviews on YouTube. Hope everybody's doing very well on this Wednesday morning. As we go through, be able to take a look at what's happening with the overall trading activity. We know that we end up having a State of the Union. They end up happening earlier last night. Uh, See how that end up affecting the market. See what's going on with everything else that's going on in the market, and obviously, um, being able to talk about something that, or finally end up talking about some code that I finally end up getting in. I'm gonna end up expressing that. Super excited about it. Um, but I have some questions for the community because there's certain things that I just don't know. And obviously, some of the people that are inside of this room, you may know a little bit more than what I do. So uh, I'm going to post that question out, and it's just a thought when it comes down to just learning a little bit more from my end. But we end up going from there. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, as we go through and get everything goes situated, I'm going to get this off of my screen, and also I'm going to end up going on to the economic calendar, and also making sure that I end up saying hey to each and every one of y'all as we go through and get everything else done. Just give me 1 second so I can be able to make sure that I at least look somewhat presentable. um, and we'll go from there. Good morning, everybody. Hope everybody's doing very well. Hope everybody ended up having a good day yesterday. Hopefully, you end up having a very good trading day overall. Flex, what's going on with you? Hope everything's going well. Let me know if my sound is good, real quick. Just want to make sure that my sound is good. There we go. There we go. Perfect. Perfect. Hope everybody inside of the room is having a good trading week, obviously. And we end up going from there. So today, what's happening? We end up having obviously President Biden ended up speaking last night. So it's not gonna. I don't think that we're probably gonna end up seeing a lot. Essentially, this is still considered to be the second week of uh, the second week of trading, and typically the second week of trading is typically slow anyway. So today um, we have a trader say, which means that the charts are going to end up meaning a lot more going into Thursday and Friday. Thursday, we're going to end up having something from Germany, and we're going to end up having something from Great Britain, but I don't think that's going to end up rocking the market. And then after that, on Friday, China's going to end up having their CPIs, but that's not going to end up affecting the market as much, depending on the way that you end up trading. So the rest of this week is going to end up being solely mainly about this, being able to take a look at what's happening with the chart, and then after that, being able to make a move. What's going on, Block? Hope everything's going well. Hey, Block, I want to ask you a question real quick. I told you about the machining. I told you about the machine learning code that I ended up receiving yesterday. Um, what ended up happening was that I have it set up on one account, but the trades are triggering in another account. I know that's not normal because obviously that's happened. That's never happened before. I can see that it's working, but it's working on a different account. Is there a quick runaround or a quick fix? I know that you know Python, so I wanted to ask you that question. It's performing well, but it's performing well in a different account. While we go through that, let's go through Smart Trader and let's go ahead and talk and see what's happening with the overall big three. If you're not familiar, what I end up doing, what I do is take a look at U.S. dollar index. I end up taking a look at oil. I take a look at gold. I take a look at Bitcoin as a way of being able to see what's going on with the overall markets. By being able to understand what's going on with those pairs, that allows me to be able to understand what's happening with the smaller pairs, like your Forex majors, your Euro United States dollar, your U.S. yen, your pound United States dollars. So you can be able to understand what's happening with the index as a whole. You can be able to save yourself a lot of time on being able to decide if you should look at being able to take a trade on U.S. based pairs, um, on being able to take a look at what's happening with Canadian dollar based pairs for oil, being able to take a look at Japanese based pairs and Australian based pairs with gold as well. Solomon, what's going on? Hope everything's going well with you. Hopefully I didn't say your name wrong, but hope everything's going well with you. If you have a pair that you want to talk about, make sure that you place it inside of the comments. I have time to be able to review a few different ones, but I'm going to see if we can get through this quickly. So we talked about transition trades yesterday. What's a transition trade? A transition trade is where the weekly and the daily are in the buy zone. We've had a substantial amount of movement to the downside or a substantial amount of movement going in one direction, and now we should see that the market should start to phase back up and go back into another direction. So from an ABCD standpoint, this essentially what this is your B to C retracement now turning to go to the C to D extension from a weekly and a daily perspective. You're not familiar with that. What I end up doing is that if you would like to be able to have a link when it comes down to Fibonacci's and being able to understand the ABCD phase, I can send you a video based off of that so you can be able to learn it. But going back to what I ended up saying, we talk about this overall in general. Let's see if I can be able to create this ABCD type of wave. So A, B, C. And currently, right now, we're starting to make a U-turn and trying to see if we can be able to finish off at this D extension. That's going to end up being 13,002 or 13,827 going up to the upside. So that's from a weekly perspective. We can also see this from a daily perspective that we was in a buy zone and we was in consolidation and the market ended up pushing up. Now, earlier, a couple weeks ago, we ended up having a sell trade from 12,814 all the way down to 12,626. Market ended up hitting that about 4 days ago. As soon as it hit it 4 days ago, then it bounced right back up to the upside based off of that movement. So we have a breakout of the consolidation after hitting a completer when it comes down to that movement. Now all we're doing is looking for this market to be able to have a counter trend line break back up to the upside. And then after that, we might have a little bit better of a feel of this market starting to move. Now, from a stochastic perspective, there's really no trade to be able to take. We need to wait for the market to be able to have a little bit of a retracement first before being able to make a move off of this one. So I'm going to say that I'm not going to look at being able to trade any U.S. based pairs until there's a true counter trend line break off of this move overall. And then once that happens, then after that, we can be able to take a look at it from a standpoint overall to the upside. But right now, there's nothing to be able to do based off of U.S. based pairs, at least right now from where we're looking at 6:40 a.m. Okay, so gonna go ahead and move on to oil real quick. I understand syntax code, which is similar to Python, but the input commands are a bit different. If it's trading on the wrong account, it sounds like an API issue or a signal message. Okay, cool. That makes sense. That makes sense overall. Oil, we're still in a phase to where we're not still trading them. Remember, we have two trades sort of set up. The resistance is at 82.50. The support is at 70. What's going on, big man? Who's that? That's Mason. Come here, Mason. Good morning, big dog. How you doing? Okay. Say hey. Say good morning. Good morning. There we go. Go ahead. We're looking at this. We're in the middle of consolidation, which means that Canadian dollar pairs are pretty much in a they're probably phasing and they're just kind of making their movements. But overall, we see we've had this consolidation literally since November 15th, and currently right now there's really no movement that we can be able to take that I would feel comfortable with until the market actually breaks out of this area. So I'm still not going to do anything off of oil. No, still not going to do anything off of oil when it comes down to this particular move, and would be wary about Canadian dollar pairs when it comes down to long-term growth. Now, if you're a range-bound trader, that trade that we end up talking about, or that support that we end up talking about right here, which was at, what was the lowest price? Right around 72.20, has been a springboard for this movement. So if we want to be honest, we can honestly say that this is probably a little bit more of a confined space of the new consolidation that's actually happening, but we're still in the middle of this area. And because we are in the middle of this area, we only have a 33% chance of being able to win. And if we only have a 33% chance of being able to win, I'm asking each and every one of y'all that are watching online, does it make sense to be able to trade? If you only have a 33% chance of being able to win in this area, is it worth being able to trade in that area? I think I know each and every one's answer, but just wanted to make sure. All right, cool. Now moving forward to gold, as we take a look at what's happening with gold, end up having a trade that we end up kind of planning out. Where we end up saying that if the market ends up falling below, what was the price? If the market ends up falling below 1862, um, then I'll be interested in being able to make a sale from 1862 all the way back to the 1800 area. Now, the reason why I ended up saying that was mainly because of two things. One, the United States dollar started to be able to make a move or started to be able to retrace a little bit based off of what we looked at when it came down to the United States dollar index. We take a look at this from a long term perspective. Um, the market has finally got up to the sell zone, going back to what I ended up talking about with that transition trade. And we end up having an engulfing candlestick right here when it came down to this movement overall, in which I'm getting ready to circle real quick. Stop, Mason. Which was right here. We end up having this engulfing candlestick overall. Now, typically, just keep this in mind when it comes down to candlestick formations. When you end up having an engulfing candlestick or an evening star or a shooting star when it comes down to the candlestick, typically the next candlestick um, will end up testing that overall candlestick, that previous candlestick, to be able to make this movement, to give it a way of being able to say, hey, is it validating this overall movement? Is this candlestick formation validated, and we're going to end up seeing some continued movement? We can see clearly that that we're in the sell zone when it comes down to gold in general, which means that the United States dollar should start to be able to gain a little bit more strength. And because of that, I would be looking more towards selling than instead of buying. So currently, what I'm looking for is this: as this market starts to retrace a little bit, I would like to be able to see that the market retraces and then gives us a counter trend line break that we can be able to make a trade off of to the downside. Until that actually truly happens, there's really nothing to be able to do. The weekly is in the sell zone and the daily is in the buy zone, which means that we don't have time frame alignment. And because we don't have time frame alignment, there's really no trade to be able to take until the market actually ends up making that. So I'm looking at this and I'm trying to see how the market's going to end up reacting until it actually ends up falling and then giving us a movement to the downside. So gold, no trade off of this one either. Um, for people that are new, type in why yes if that makes sense. For people that are new, type in why yes if that makes sense on why I'm not looking at being able to take a trade off of gold yet. All right, cool. Let's take a look at Bitcoin. Block out your algos working on Bitcoin. I don't know if y'all noticed, but my son has socks on his hands. He's been putting socks on his hands for the last few days. And he and randomly just hugging me out of nowhere, but it's cool. Bitcoin finally ended up breaking out of that. Ended up breaking out of that 16,500 area. I end up having 3 solid weeks of overall movement, and currently right now we're just in the consolidation phase of it. Once the market breaks above 24,350, then we know that it's truly going to end up being out of here, and the next step we end up being we end up going up to 29. At this particular point, right now, I just think that the market's just going to consolidate and then after that have a little bit of a retracement before actually being able to make a movement back up to the upside. Now, Bitcoin and other cryptocurrency is always different when it comes down to this the wave of movement. It doesn't necessarily play by the rules when it comes down to ABCD phases and everything else. Just because someone can be able to say, "Hey, this is going to be the next coin," and then after that can shoot across. It can be able to skyrocket just based off of that. Um, Now it hasn't been like that in a while, but currently right now we're looking at a consolidation between 23,790 and 22,310. Um, Once I found out how to remove consolidation ranges, it's been much better. What you mean? I thought your system was based off of consolidation ranges. um, but as we end up taking a look at it currently right now, market's in the middle of that resistance of 23,790 and support of 22,310 until the market ends up breaking out of one of those directions. There's really no trade to be able to take until it actually ends up breaking out of the area. Once that happens, then after that, obviously you got to buy a trade. The buy trade, if it breaks above 23,790, I'm taking it all the way up to 25,000. I will look at being able to take a portion of it out at 25,000, and then after that, obviously, if it breaks a resistance, it's going to end up going up to the next resistance. The next resistance is at 29,000 overall, which is basically this large scale consolidation that we was at really pretty much from 2020 until April 2022 when the market actually ended up falling. So currently right now, this last fall that may end up happening will end up being will probably end up being the last fall that may end up happening overall for this pair. And then after that, we may end up seeing the market start to go back up. Swing trade on my algo. Remember, just run the grid box through consolidation. Okay. What's going on, Jack? What's going on, Major? Hope everything's going well with you. Thanks for being able to pop in. If you got any trading pairs that you'd like to be able to talk about, make sure you end up placing inside of the comment section. But thanks for being able to pop in. Truly do appreciate it. Oh, speaking of that, we're at 945 followers in the Carter Cow Capital group on TradingView. Thanks each and every one of y'all for being able to do that. We're getting so close to that 1,000 number. I wanted to make sure I end up saying I appreciate everyone for being able to do that. Let's see. Do you use Elliott wave theory? I look at ABCDs when the market is trending. I don't necessarily use Elliott wave theory when it comes down to that. But it is obviously it has some similarities. Do I use or just use trend lines? So I have 3 different type of trading styles, and that's not counting algo trading, in which we do that all the time. Essentially, when the market is trending, and I know the market is trending, then after that, I trade Fibonacci's. I trade Fibonacci's C to D movements. So after the market's already done retraced, and after that, we go into that phase of being able to go to the push phase. So a C to D movement, I end up trading that. When the market is in consolidation, obviously we end up trading support, resistance. Everywhere else in that area really doesn't matter. I really don't do that as much because I really like waiting for the market to be able to break out of an area, and then once it breaks out of that area, it goes inside of these low volume node areas right here. This is more of the style that I actually end up teaching inside of these sessions, which is bless your son, which is more vortex trading, which means that essentially what we're doing is that we are taking advantage of low volume nodes and unfair market prices to be able to make our entries in where we can be able to make explosive gains within a certain amount of time. You would like to see a case study on that? You can be able to take a look at my my page and be able to go from there. What's going on, big man? Oh, you want to say hey to everybody?
Hey there, everybody.
Well, hold on. Okay, get in the middle. Say hey. Say good morning. Say good morning.
Good morning. Good morning.
There we go. No. Y'all go upstairs and get y'all clothes. Go upstairs and get your clothes.
Well, it's gonna charge.
Huh? Yes, I needed to charge. But
will I go 100?
Yes, it go to 100.
No.
Go upstairs.
Mine's going 100.
Okay, well both of y'all are going to 100. Go get your clothes real quick. All right, so let's talk. US30. So to kind of give you an example, Stephen. And this is a pretty simple one. Been taking a look at US30. When I look at vortex trading, it's the equivalent of being able to get onto a highway. You end up seeing that that there's a wreck probably about a mile ahead, and then from that wreck a mile ahead, you end up having a whole bunch of traffic because of that. All these cars are kind of piled up. Now that slow movement throughout that overall area before you end up actually seeing the car wreck and being able to pass is nothing more than high volume nodes. Let's see, the younger one has the voice of a grown man who makes that's funny. So that's nothing more than a high volume node. High volume node is where you end up having a collection of a lot of price action that ends up happening inside of that area, and because of that collection of the movement in that area, typically what you end up seeing is just nothing more than consolidation. So I do not trade inside of high volume nodes. I tell everyone inside of these overall channels, I do not trade inside of high volume nodes because high volume nodes lead to consolidation, and consolidation leads to 33% trades. There's no reason to be able to trade inside of that area. If you live by that, you basically done saved yourself right around 20% when it comes down to your losses, 20 to 25% when it comes down to your losses overall. Now, what I do trade is this. If you notice inside of this blue box that we end up going through, we know that basically from this looking at the volume profile in this area, once this market ends up breaking above 34,185 from a buy trade perspective, and truly clears above that area all the way up to 3,400, then we have a lot of low volume nodes or a lot of free space that we can be able to take advantage of that not a lot of people are trading. And because of that, it gives us a better chance of being able to make profit in an area where not a lot of people would be trading in that area, because the fight is happening right now between bulls and bears. Once the direction has been made, then that's where we want to be able to get into a trade. How long I've been trading? 6 years. 6 years, going on 7 in May. But from that, that gives us two opportunities on this trade. Once the market ends up breaking up, remember we have two pending orders that we end up having placed out. One is at 34,400. We end up looking at being able to get out at 34,550, and then after that, the second one end up being from 34,400 to 35,400. So we're going big fish hunting on the second one, which will end up allowing us to be able to make a substantial gain off of this one. Stop loss in between both of these is going to end up being about 300 points. Which means that we're going to have a risk reward factor of 1 to 3.5 on the large one, and then right around the 1 to 1 on the second one. Obviously, I don't necessarily like trading 1 to 1s overall, but what you could do if you're looking at being able to get in early off of this movement, because we're seeing that this market is making a defined support resistance, is that as soon as this market ends up breaking above 34,160, you can look at being able to limp in on this trade. So essentially, you'll have the same orders, but it'll just mean that you get in off of this trade at 34,160 from a long perspective. And then after that, I would look at being able to place my stop loss at the bottom of support, or at least right below the high volume node, the middle of the high volume node at 33,810, somewhere around there, going after the same position. So you're talking about a 1 to 1.4 risk reward ratio on that one, and a 1 to 3.34 on that one, but you're going after 1,200 points compared to 900. If you look at being able to make the move based off of the breakout of this blue box. So I'm going to keep that right there as an example trade. I want to see how the market reacts first before being able to plug that one in. But we do know that obviously we've been in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of consolidation. The more days of consolidation, the more wound up that the market actually is. As soon as it pops out of that movement, then we're going to end up having an explosive gain out of that movement, kind of like what we talked about with the car crash. As soon as you end up getting past the car crash and everything else on the highway, you got this free lane of space that you can be able to drive through and go real fast. Essentially, that's that area when it comes down to trading, or a vortex area that we end up talking about. So I know I just went a long way to be able to say that I got 3 trades that I'm looking at being able to get into, but there it is right there. Some people get bored about that, but that really excites me, because really and truthfully, I can be patient and allow the market to be able to play itself out, and then after that, really be able to get into the trade when the market is truly ready to be able to make a movement. And if we're wrong, then we can be wrong quick and just have a quick loss, and then wait until the market actually ends up breaking out again. So there we go. NAS 100. Let's take a look at that one. That'll be the last one for today. We take a look at this one, kind of giving another example of this one. Previously, we end up making a trade. We end up making 2 trades off of this one based off of this high volume node, this low volume area. This is the space that we want to be able to take advantage of, this whole area inside of here, which was from 12,083 all the way up to 12,450. Literally, the market ended up making that 400-point move in a span of a day. But it took a little while for the market to be able to get into that position. And currently, right now, what we're looking at is this: market end up breaking out of that area. We end up having a triangle. From that triangle, the market end up breaking out, retesting, and then after that, breaking out again. We take a look at this from a 4-hour perspective, just to kind of give a little bit more context. Um, we are still in the midst of the middle of this high volume node. Um, we have a little bit of space in between 12,740 to 12,987 that we can be able to take advantage of, which is basically the consolidation that end up happening from um, the consolidation end up happening through July 28th all the way up to August 3rd that we can be able to take advantage of. Um, but until the market actually ends up kind of defining what it really wants to be able to do with this movement, I would actually look and kind of hope to see that the market creates some consolidation going into today, um, and going into today in the next few days before actually being able to make a movement. I'm not interested in being able to jump into this movement yet. It hasn't defined a resistance yet when it comes down to this. We have two areas where we have long wicks, but we don't have a defined resistance yet. We have a defined support, but we don't have a defined resistance. So there's really no trade to be able to place in as of yet. Until once that happens, and after that, we can be able to start being able to make a move off of it. Okay. So I'm not even going to suggest anything right now off of this movement. But I do like what we have with US 30. The question is, how long is it going to take for to be able to make that movement? Now, you can place in your pending orders. You can place in your pending orders now off of US 30. Um, and really and truthfully, that's the only trade that I would feel comfortable kind of placing out, at least at this particular point in time. But I would not place it out at the 34,180 area yet until I see the market go at least halfway down and then start to pop back up. Once that happens, then after that, I feel a little bit more comfortable being able to say, hey, it's go time on being able to make that movement. Now, if you like what I ended up talking about, if it made a lot of sense, do me a favor. Make sure that you end up clicking on that boost button for the people that's on TradingView. For the people that's on YouTube, make sure that you end up clicking on that like button, and make sure that you end up clicking on share. Obviously, it ends up helping out me with the algorithms and everything else to be able to go through. Like always, I definitely end up appreciate each and every one of y'all being able to pop in. Obviously, it's 6:30 a.m. or 7 a.m. in the morning where I'm at, so it may be a little bit different for you, but I'm literally about to head to work at this particular point in time. But like always, make sure that you end up planning your trade your plan. I'll see each and every one of y'all in the next video, and we'll do this all over again. Take it easy.